Hello, everybody. Welcome to another episode of the TF Podcast. My name is Jonathan G. Blanco. I'm really excited for my next guest. His name is Gregory Nguyen. I had the chance to meet him in Austin through our TF Austin chapter about last year. And Greg's been doing a lot of things with trading and hedge funds and minerals and mining. And so I'm just really excited for his point of view. I like to see what he says on LinkedIn about what's going on in the market. So I wanted to invite him. And with that, let me welcome Greg. Thanks for coming.
Thanks, Jonathan. Thanks for inviting me. What's really interesting, I want to bring out, since you've been to Austin a few times, I've seen your speakers. The diversity, even though it's blockchain focused, is pretty interesting because I think on consecutive back-to-back months, you had Jimmy Song.
Yeah.
He's a total Bitcoin maximalist, right?
Totally.
And then the next month, I think he had Nitin, the gentleman from IBM.
Right.
The private chain and Hyperledger. So you've covered the whole basis, and that's really what I like about Bitcoin and cryptos in general, because you talk to Andreas Antonopoulos, he has no interest in hedge funds.
Yeah.
He's all about the technology. Some people think certain companies are awesome, some people aren't. So it attracts a lot of different perspectives. I mean, in the beginning, I say in the beginning, Scott Robinson, who I'm not sure if you know, he had the plug and play fintech division. I think he invested in 150 fintech plays, and he started up the first Bitcoin meetup in the world around 2011. And I joined in 2012. I think I wrote about it, my first blog in 2013. And, Roger Ver and Andreas Antonopoulos are the co-organizers of that group. So Scott made a lot of introductions. I think he's into CBD right now a lot, but he's there from pretty much not the very beginning, but like I said, it was the first Bitcoin meetup.
Yeah.
That kind of ties into my history. I started off in high tech, mostly defense electronics. I figured I'm probably killing people with the missiles, honestly. We designed the radars for the F-14.
Oh, wow.
Fighter jets, yeah.
That's intense.
Yeah, all the, we had secret clearances and some things I can't talk about. But basically, it was an airborne Doppler radar. And I naturally transitioned to semiconductors, which, I lost a lot of money in the tech bubble, even though I knew my customers are all the semiconductor manufacturers.
Mm-hmm.
Just to give people perspectives, millennials especially, Intel and Microsoft are very solid companies 20 years ago. They still are today. But that doesn't prevent the shares from imploding, because I think it went from 8, and this disclaimer, this is not financial advice. Do your own due diligence.
Yeah. No financial advice here.
Yeah. I think Intel was at 85, and being as smart as I was, when it dropped to 42, I bought some more.
Well, give me a timestamp on this. Sorry. When was this?
From 2003, the NASDAQ dropped 78%.
Okay.
So Intel dropped from Teradyne, who I worked for, went from 115. I had some options at 3, 6, and 9, all the way up. And thank God I cashed out in some of those. But they went from 115 to 3.
Wow.
Intel, they're still profitable, these companies today, right? Well, they were last quarter. And Intel went all the way down to 8, I think.
Yeah.
So Microsoft, they all took a dump, right? And it was only like a few years later, at least 10, where I was made whole again. So to all you millennials that haven't experienced a bear market, and I posted this, I probably post too much online. They've never seen a bear market.
Mm-hmm.
So, it's not just buy Tesla and retire. So I knew this is going to happen. And a lot of people that know me, they've seen my posts on LinkedIn and Facebook. I'm pretty transparent about it. I try not to be specific with symbols and actual securities. But, this was coming. And basically the bubble was in place.
Right. Yeah. We had 11 years of positive gains.
Right.
Probably is that the longest? I'm pretty sure that's the longest we've had without some sort of
pretty much
correction.
Right. And I would argue it wasn't really a full-on recovery. As we all know, it was all sugar-based.
Mm-hmm.
QE and the Fed putting in the Fed put, as they call it. You just buy all my clients know this on the precious metal side, BTFD, buy the freaking dip, right? I use another word. Okay.
Yeah.
So you have to select when to deploy when. And also there's a lot of these exchanges. If you go to the leaderboard, I guess I could name BitMEX. geez, those guys, there's some of those guys are their return on equities. I think the leader is 624,000%. I'm thinking, this is nuts, right? The other guys are
Yeah.
110,000. I mean, and so they've got to know. They have to know that they must know how the exchanges calculate those ratios, interest rates, funding rates, all that stuff. Like I said, I can't say too much, but Renaissance, for instance, is moving in on this space. Those guys are beasts, man. I mean, they're, or the prop trading desk, the DRW, we're talking to some of those guys at Cumberland. A lot of these guys are prop traders on Wall Street, or they're market making already. And they're co-located, right? Their servers are right next to exchanges. They've got a picosecond advantage. They want to prevent others from getting in front of their line. That market is so mature. If you're not trading $1 billion, even more than that, you're not really a player.
Yeah.
And they think our sandbox is like for kids.
Yeah. Can you break that down a little bit? Like what that means, right? Like when, break that down for someone that might not understand how trading goes, as far as, the ability to essentially move markets with your position and so forth.
Okay, so, well, it's very hard to do that in the traditional equities markets or the fixed income, the bond markets, right? Because it's very liquid, very deep, and you pretty much have to have billions under management, many billions. Well, in the crypto space, what's Bitcoin? 150 billion?
Yeah, probably around there.
Yeah. And so without revealing too much, you don't need as much AUM to really trade and to scale. You need a lot more capital to play in the other sandbox. And so the prop trading desk, some of you guys may not know what that is. See, it's kind of weird. There's capital markets and there's blockchain and Bitcoin. And what we're trying to do is kind of marry the two industries. A lot of guys on Wall Street don't understand protocol at level. They don't understand chain analysis. And some guys may not like that because, it's kind of pseudo-anonymous. But chain analysis, you can glean a lot of things from that. Again, without revealing too much, you don't know which wallet addresses. Remember, it's open source, right?
Right.
You don't know whose wallet belongs to whom, but you can tell if that person, that wallet, by their behavior, you can tell if they're whales or exchanges, for instance.
Yeah.
On the number of certain inputs and outputs. And so, again, some of our algorithms, we look at 100 different data vectors, right? And so not all of them apply. You don't want to apply too many ingredients in the kitchen.
Mm-hmm.
But there's a lot of things you can do because honestly, even legal insider trading is legal because it's open source.
How often do you think that happens?
On certain levels, a lot. It's all relationships. OTC market, there's very few super large whales that are looking to get rid of their Bitcoin. Because if they have that much Bitcoin, chances are they're pretty maximalist. They're not really willing to dump. So when they do want to dump, finding buyers isn't that hard, right? Sellers, a bit harder. But on OTC deals, and even, if you know the miners and even some of the exchanges, it kind of helps, honestly. But Bitcoin is not a publicly traded entity, right? There's no insiders, there's no shareholders, no executives.
Mm-hmm.
A lot of this stuff, you just, you hear things, people. And besides that, I mean, the market making algorithm, it's like, we're agnostic. We don't care which direction it goes, right? And so, again, I can't reveal too much because we're in the middle of, launching. And so, but there's a lot of information that you can glean if you know what you're looking for. I'll leave it at
that.
Yeah.
Let's move on to what's kind of happening in the market right now, right? So
Sure.
oil just dumped yesterday.
Yeah.
We were below zero. Yeah, we were texting back and forth about it. And that's crazy, right? Like I don't think too many people ever thought that oil would go to 0, 1, and then especially to negative. What are your thoughts on that? Like, and how does that compare to other commodities and so forth?
Well, there's a lot of insights on that, and all pretty much scary because look, I'm pretty good at trading, but man, yesterday I would have lost my ass, honestly, because when it went down to 14 cents, I was thinking, man, maybe I'll like go to COMEX and short that. Go long, right? Because it can't go below 0. Spot probably didn't go below zero, right? Went to zero, it's free oil. But my gosh, the May 20 contract went to, I think, minus $40.
Yeah.
You know, anyone it was long yesterday were wiped out, basically, taken out on a stretcher. And so, so forget all that, the mechanics, you can go and probably zero hedge and kind of find out what really happened there. But the ramifications of this going forward is horrible because many countries offshore, and we can't be so US centric, right? A lot of countries abroad depend on oil revenue.
Right.
That's completely wiped out. By the way, you know, I went the other day to the grocery store, the supermarket, and orange juice is $18 or $9. So inflation's hitting here now, right? Toilet paper, dumbbells, you know, used to be $50, now it's $250. It's people working out at their homes and they're bidding the price of dumbbells. And so, but in other countries, you know, if they're making $2 a day, they get food inflation. They're screwed, right? The Arab Spring thing and all that stuff, the Mexican crisis, the tortilla. And so I think a lot of other countries, especially emerging worlds, and the developed world's getting hammered too, don't get me wrong, but those guys are going to be starving.
Yeah.
So those are the consequences. I don't think people have really, you know, wrapped their heads around.
Well, in Venezuela, for example, a country that's known for its oil production, they're not even producing oil right now, or they just can't. Part of it is because of degraded infrastructure over, you know, the last 20 years of the Chavez regime. But you know, I have family there, and they're like, yeah, you have to be in line for days to get gas, to get petrol. So it's pretty crazy.
Well, yeah, they had their issues long before this coronavirus, but this certainly doesn't help, right? I mean,
well,
it's the board.
Yeah, and it's pretty interesting how you know, a lot of people realize that, hey, we were coming towards some sort of climax, you know, in the markets overall because of so much growth and just kind of how things have been shaping up. But you know, coronavirus obviously pushed it over the edge, right? And like, so that's been pretty interesting just to see.
Well, the bubble, the I call it the all everything bubble. I'm not the only one that's called that, but like in 2003, the Nasdaq dropped 78%, right? Peaked off. That was a tech bubble. And then in 2007, December to March 2009, that was the real estate bubble. You know, it was subprime that blooded up to real estate and then financial markets, which is interesting because I'm pretty much a generalist too. I mean, if you read up on that, Iceland was leveraged 100-1. Yeah, that's not the bubble. They're defaulted on their loans to German and English lenders. And that, of course, propagated over here. I mean, the Fed itself is the most leveraged hedge fund in the world right now. Know that they're pretty much insolvent. You know, what's their balance sheet now? 6.2 trillion. You know, it was 800 billion at the last crisis, right, in 2008. So things are completely nuts, and I don't think people really appreciate that. Yeah. And you know,
right, because that money has to come from somewhere, and they're the ones producing it. And, yeah.
I mean, pretty dystopian what I'm describing. So the good news, and I'm blessed, believe me, a lot of my business partners, we understand this. We're still busy. The deal flow has never been crazier, honestly. And my precious metals business, you know, we used to get what, $10,000-$50,000 orders in the last month. Usually on a Monday, for some reason, people panic on Mondays. We're getting $1 million orders. It's nuts. Even though the premiums on silver have blown out to, my competitors are charging on SRS Sirocco. They actually kind of highlighted the precious metals business, and the premiums on some of my competitors are like 100% on American Silver Eagles. So I talk about that a lot too. The physical market has decoupled from the spot market. Just in oil, this is kind of very interesting. Oil, there's a spot price and there's a contango, the futures price, right? Starting in now in July, August, September, oil's around $20 a barrel still. The June contract dropped because the pressures, right, from the spot of the May contract. The June went from 21 to 15 as of this morning. Because what's happening is the paper markets are not a true representation of the physical market itself. Because right now there's a glut in oil. So the front contract, I guess the May just expired today. There's a lot of pressure there. There's a glut and there's no place to store it. We can talk about that later, by the way, with my oil tanker play.
Yeah.
Again, this is not financial advice. This is what I've done. Okay. But so in the gold and silver markets, there's a decoupling from the physical markets, which has 100% premium on silver coins, about 10, 12, 15% on gold coins. That's decoupled from the spot price. That's the paper price. Okay.
Yeah.
What's happening is there's a shortage of physical in gold and there's a glut of physical in oil. So what you saw yesterday happen when oil tanked into the negative territory in the up close month, at some point you're going to see gold and silver do that, only in the opposite direction. Because right now the refineries are shut down. They're running this is gold now. They're running at a quarter of capacity in Switzerland. Switzerland refines and recasts 400-ounce bars into 1 kilogram bars. They do 70% of the world's gold. We're shut down because of the coronavirus. They're opening up a little bit. The mints, the U.S. Mint, the Canadian Mint, have been shut down. The mines themselves have been shut down. That whole supply chain, demand is soaring. And usually, if demand's soaring, right, with economics, you go from 1 shift to 3 shifts.
Yeah.
Switzerland. They're going from 1 to 0 shifts. So the shortage of physical product is unbelievable. I was one of the few dealers that had some products. I still had a 4-week lead time. Yeah. And we ship, thank God, and the premiums are still high. They're lower relative to my competitors. This is not commercial for me. If you can find gold and silver, buy it. It doesn't matter where you buy it from as long as they're legitimate, right?
Yeah.
But the point being is, because oil collapsed, because the futures markets weren't representative of the physical market, there's a huge glut, right? In gold, again, the paper markets were not representative of the shortage of physical. So at some point, I don't know when, I'm not God, I'm not a prophet, you're going to see the same stresses with gold and silver, only in the opposite direction.
Yeah.
Right, so you can't find it.
And then, so once supply catches up, though, do you think it goes back down? Right. So like
the premiums may come down. Like 100% premium is like a ripoff. I mean, I'm not saying they're ripping off people. It's just, that's supply demand economic. But having said that, the spot price will go up at some point. It kind of already has since 2016, because the Fed and the U.S. Treasury are turning on the printing press, right? Mm-hmm. And got currency debasement, which is why there's gold bugs like less. That's our existence, right? And by the way, that's why Bitcoin is kind of a natural extension for me. Yeah. Because back then you could mine with CPUs. I didn't do that because it just wasn't profitable even in 2013. And then it was GPUs. Now it's ASICs, right? That's semiconductor technology. They're driving that, the Moore's law really hard. And then if you read Satoshi's white paper, he's pretty much libertarian Austrian economics, like a lot of cypherpunks were. There are a lot of, if you study the history, pre-Satoshi, there were a lot of attempts at this. And a lot of them, just like Napster, they were music sharing files, but they were shut down because they were centralized.
Yeah.
Right? But then BitTorrent came along because it was decentralized. So the reason why I think Bitcoin succeeded, is the first one to succeed, is because they were decentralized. Right. There's an entity to go after and shut down.
Yeah.
And blockchain. I mean, that's why we're here.
Totally. Yeah, totally. Like, not only the first, but you can argue the only. I mean, sure, there's others that do some level of decentralization within whatever network they have, but like, as a truly, across the board, 0 to infinity, and you can argue against that by saying like, oh, well, there's miners, there's market manipulation and this and that, but not one entity can control all that. They might influence, of course, at certain levels, but yeah, I agree.
Plus being the gold and silver markets for so long, you understand market manipulation. You're bending the conspiracy theorist label, and it's kind of interesting because all these theories are coming true. Mm-hmm. I mean, there's a major investment bank. They're literally being prosecuted as some of their traders have been, manipulating the gold and silver markets. And gold bugs for years decades even have been saying it's been going on. And now it's coming true. The former CFTC chairman even admitted afterwards that the Bitcoin futures, the reason why that got created so quickly, December 2017, right? SIBO and COMEX, because they wanted to knock down the price of Bitcoin. You could use leverage, right? And so 20 to 1 sometimes. And so remember Paul Volcker, one of my chairmen that I actually respected. He in his autobiography, he admitted that they were supposed to suppress the gold and silver markets. I mean, it's if the evidence is there, it's just you have to find it. And so there's a lot of disinformation. The reason why I say it's so easy to make money now, and maybe it won't be anymore, who knows, but there's so misinformation. There's so much being dispensed out there that if you're willing to seek the truth, and the truth to me is accuracy of results, accuracy of data, right? Not narrative, right, left, whatever, right? And there's a lot of, it's coming from both sides. I mean, people are, to me, the debt bubble was already in place. It's just the coronavirus was the pin that pricked it. I'm not the only one that's saying that. There's a few of us. It's just the majority of the people don't think that way. They just blame everything on this virus. It's like, no, it's also the shutdown globally of the economy.
Yeah.
I mean, the movie industry, which I know a lot of people in that industry, living in Hermosa Beach for years, it's completely shut down. Movies were $100 million projects. King Richard, I think, was a movie based on Serena Venus Williams' father. It's a movie on how he raised them and stuff. Will Smith is on that project. He got paid, but it was a $100 million budget. That got canceled.
Yeah.
Not only are 100 people on the set out of jobs, what about the $100 million investors that invested in that project?
Yeah.
And then about the banks that funded it, right? So it's a trickle up. People are suffering. Tenants don't pay. That means their landlords aren't getting paid. They default on their mortgage. The banks, of course, now they had their non-performing loans rises. Shale oil, right? There's going to be 200 oil companies that are going to be out of business, right, in the next, if they're not already. What about the lenders? If you're looking for short opportunities, like I said, when I texted my partners, short equities, especially the transports and energy. And so, I mean, that was easy. I don't know. Carnival Cruise Line, I should mention names, but the airlines, I mean, that was one of the easiest trades you can make.
Yeah.
Yesterday, I actually went long on a couple I hate ETFs. They're not true representations, but I actually, without going to the futures market, thank God, I would have lost my ass.
Yeah.
There were some things I picked up. So, at $1 a share, I mean, it was this one ETF was trading at over 107. That was the all-time high. It's trading at $1.30. Wow.
That's crazy.
So, the downside is 100%. The upside could be 1,000%, right?
Yeah. Yeah.
It's asymmetric. That's what we look for. That's what I look for.
Got it. So you're willing to take on that risk because the upside is there's so much.
Sure.
Upside.
Yeah. And it's not rent money. It's not my life savings. It's just, I'm playing. Like I said, the mass company, that was an easy play because I didn't have to analyze it. Because a lot of times when you analyze things, Kevin, a local guy here, he probably doesn't want me to mention his name, but I won't mention his last name. A lot of these guys are really successful traders, by the way. They don't advertise.
Yeah.
I mean, you see guys on the internet, like, oh my God, what are they doing? Are they trading 3 million? That's it, really? But yeah, he's a former regulator and he's been trading since '85. So that tells you he's really good, selling volatility all these years. So he's one of the guys that bought that little mass company. But anyways, he's been around the block, and way back in September, remember the repo market was kind of convulsing.
Yeah.
Overnight rates went from 2 to 10%. We knew, and we were going, what's going on here? There's been negative interest rates for 3 years. By the way, now there's negative for oil. So I think what's going to happen is, things are turning upside down. It's going to start propagating throughout all the industries.
Yeah.
There's stress in markets is the takeaway.
Totally. So when in the, you mentioned like the .com bubble and then 2008.
Sure.
when we've seen the markets kind of erode a little bit, they've often stair-stepped a little bit down, right? Like it's and it seems like we're still on the first step on that stair step. I don't think we've taken like the next step down. What are your kind of thoughts on that, based off what you've seen in
Yeah,
the past in combination with what's going on right now?
I guess you have been reading some of my posts, but I call them sucker rallies because if you go, and I hate to make this comparison either, but between 1929 and 1932, the Dow Jones dropped 89.2%. But there were 6 bear market rallies in between that time period. So yeah, what happens is when things are this bad in the bear market, it's not just a sudden drop overnight. That kind of happened in 1987, right? But in the early 30s, from 29 to 32, there are 6 counter rallies. So what happens, like, I call them sucker rallies. And so I've been fading the rallies because you're hearing the buy the dip crowd again, which I'm like, this is, sure, I understand the sugar the Fed is injecting. So yeah, that's bullish, right? But to me, it's just bringing in more people about to get slaughtered. So
Right.
I'm wrong. By the way, a lot of the times when I trade, I hope I'm wrong, but I'm kind of betting I'm right.
Yeah.
So again, I'm not a market prognosticator. I'm just telling you what my thoughts are and how I've been trading. And I'm not alone. I mean, Jeffrey Gundlach, you might heard of him. He's a bond king now. Bill Gross of PIMCO used to be. Gundlach is now acknowledged. He actually called the 2008 equities bubble. I mean, he's long gold too since 2018. He's long, and he believes he's fading the rallies as well. So, I mean, look, the movie industry itself, they actually announced results last quarter. Their revenue in 2019 Q1 was 207 million, I think.
Mm-hmm.
People go to the movie theaters, right? Well, their revenue Q1 this past quarter, was $6,000.
Hmm.
There's there's a bunch of zeros missing there, and so people they don't understand the scope. I think instincts they do by instincts, but they haven't acted. They're like paralyzed if they are in the markets. And like I said, that guy Kevin, he was saying, Greg, what's the secret to your success? I'm not the smartest guy in the room, so I know a lot of smart people, and I try to learn as much as I can from them. I mean, I talked to Marco Piraboom, the Decred lead developer, for 5 hours about consensus algorithms. I mean, over a couple beers, of course. He likes his beer.
Yeah.
But Kevin basically said, look, the reason why I'm fairly successful is because I trade with my instincts, but my head gets in the way. Okay? And so I totally I can appreciate that.
Yeah. So on that staircase down, and you were saying in the 2030 after the Great Depression or during that time, there was, you said 8 bear markets, 6 bear markets,
6 counter rallies,
right?
And then it bottomed in 32, and then went up to 37, and then it crashed again.
Yeah. So what's interesting is that we haven't seen what Q2 earnings look like for companies, and I think it's safe to assume that they're going to be
horrific,
terrible. Yeah. Not only that is that unemployment numbers are continuing to go up. We're not sure about how much stimulus people are going to get, and then what are people doing with their stimulus? Are they just saving it or just paying bills? Right. It doesn't mean that they're necessarily spending more because they get this 1,200. So what do you think happens? Let's do a little fun prediction here. That's not advice, but what do you think happens in the next couple months?
Well, I'm pretty sure in a couple months you're going to see a downdraft. We're already experiencing the last 2 days. But to me, a couple points. To me, it's not stimulus. It's MMT basically. We're socialists now. Not to get political, but we're basically into socialism. We're nationalizing industries, but it's not stimulus because if you notice, a lot of people are buying $1,200 worth of Bitcoin. By the way.
Yeah. Yeah.
So the ones lucky enough to have discretionary, they're investing. Gold and silver, of course, too. But for a lot of people, though, they are spending it because there's 30 million people are out of jobs, and we're not just talking waiters and waitresses, and God bless them, bartenders. We're talking flight attendants, pilots, and now we're talking here in Austin. It's starting to peak a little bit, but I know a gal who's a nurse at 2 different hospitals. One she's a director of. She had to lay off 40% of her staff.
Hmm.
These are nurses.
Yeah.
And I guess they can get redeployed somewhere, right, where there's hotspots. But what you're going to find is you're going to have inflation, dumbbells, orange juice, toilet paper, gold and silver. You're going to have deflation in other areas. It's going to be a very tricky market. Oil, right? So you're going to have very uneven markets based on the supply chains being disrupted or not disrupted.
Yeah.
So it's going to be a tricky market. But if you know, if your domain, whether it's oil or gold or whatever, or, you know, medicine, you can do very well. But to answer your question, I think it's not really stimulus, but what we will have is the worst of both worlds. Back in the 70s, again, history, they coined a phrase called stagflation. Because usually when there's inflation, that means the economy's good, wages are up, prices go up a little bit, everything's hunky-dory. Well, during the 70s, the first time it happened, thanks to the oil embargoes, Iran, the oil shock, gas lines, right? Shortages, silver going from, you know, a few bucks to 50, right? That was nuts. I knew the price of silver at that time, by the way. No one knows it today. So that tells me, right? There's this market psychology. But anyways, we had high inflation because of the oil shock, and we had a stagnant economy, hence the phrase stagflation. I think we're going to get that in 2020 and going forward. Only I think it's going to be worse because, like I said, you know, even in 2000, 2003, 2008, you and I can go to a restaurant. We go to the ball game, go to a conference. We could fly, go drive, stay at hotels, conferences. You know, I know you had to, I'm sure some conferences got canceled. Go to a movie. We could do all those things. Today, it's completely shut down.
Yeah.
It's not just going to restart overnight. Just like you can't shut down an oil well and expect it to start up again. That's why even though they're attaching dollars to every barrel, they're still drilling.
Yeah.
And we're going to have this glut. I think it's going to be very tricky markets going forward. I think it's going to be pretty bad for most people. But again, I mean, there's things you can do to protect yourself, you know,
totally.
Tangible assets and whatnot.
Yeah. Yeah. Well, last topic before we wrap up, you're obviously bullish on Bitcoin
Sure.
and the halving's coming up. What do you think happens? A lot of people have been talking about, like, you know, the price being, or Bitcoin being priced in already at the halving. And that was happening when, you know, the price was 10,000. Now we're at, we're hovering around 7,000. We're probably just, I think we're like at 68 or something right now.
I'm long, look, predicting the price of Bitcoin is kind of dangerous.
Totally.
I'm not good at it. I am long-term bullish because of halving. I mean, you know, the stock to flow model from Plan B. I mean, I've been following that pretty much. So I think long-term, you know, because of the cap, the 21 million cap. And by the way, it's to a lot of newbies, there's going to be 21 million. There's like 18 million now, but a lot of people lost their passwords. So the Bitcoin's not lost. It's just no one can access it.
Right.
So they'll never trade, right? But I think what's going to happen, markets tend to do this. They whipsaw people, the head fake, you call it, the Wall Street head fake. I think long term we're going to be bullish. That's a given. But there might be one final takeout where they'll crash it. If equities crashes, then that's a good excuse for Bitcoin to crash, even though it's supposed to be non-correlation, right? It's still correlated as a risk asset up until this point. There's some separation, but I think we could see a revisit down. Again, I'm totally speculating on this.
Totally.
I really don't know. But to me, if based on history and seeing how markets work, I can see another drawdown, clean out the weak hands, and then, you know, the hodlers or the strong hands. I think after the halving, even before the halving, I think we could see a run up.
Yeah.
I wouldn't even take that with a grain of salt, because on the other stuff, I'm pretty sure, because the markets are pretty, you know, you can tell when markets are down, when there's no business. There's no revenue, there's no earnings. So technically the shares should be zero. They're not going to go because of, you know, the Fed flooding the markets, but there is a dollar shortage too. Anyways, there's a lot, I'm all over the place because that's how markets are. There's pros and cons, right? There's balances and balances. And so you kind of have to be tactical, not just strategic.
Yeah.
Bitcoin, I have no idea, honestly.
I like
uh,
that answer because a lot of people seem to know when they don't.
you know,
So,
I mean, I've talked to experts, Jonathan. This is the crazy part. A lot of them, they're on podcasts, they're all over the place on social media. They don't. I ask them, they don't even know how a Bitcoin transaction works.
mhm,
You know, why people get so nervous, right? Like you enter the wrong digit and boom, you're toast.
totally.
There's a
Oh,
reason
totally.
for that. You have to empty your wallets, right? Because there's multiple wallets, and in order to prevent the 51% of tax, you have to show proof of work and consents, all that stuff. They don't understand how Bitcoin transaction works, which is kind of interesting.
Yeah.
Yeah, so-called experts. So it's a complicated. I mean, even opening up a wallet these days isn't that. It's getting easier, but it's
Right.
not. Opening up a bank account is kind of difficult too, by the way. But I had a friend that wants to deposit. This is no endorsement, but there's some banks that are pretty friendly to crypto, friendlier. So he wants to deposit 25 million. I did not recommend some other banks, right?
Yeah.
Because it's hard. It's the KYC, AML, and I understand you should have that. But then again, with exchanges, Binance, I can mention them, Binance and BitMEX, they're not. There's a reason why they're not focusing on the United States market.
Yeah. Yeah. Just focus on what works for them.
Yeah. So we like compliance, by the way, and we're talking to ErisX. Um, there, there's some PR out now, but they're basically, if you go on their website, their investors include Fidelity, TD Ameritrade. They're going after some big fish. And so what's good about that is hopefully soon Joe 401k or Mary IRA can start investing in Bitcoin now.
Yeah.
Not just using the GBTC. That's fine. I'm glad that vehicle's available. I have some actually, but there's a premium attached to that, right? So
Right.
no, I don't like ETFs. So, but if people can start investing in Bitcoin itself, the average Joe, I think that's great. Uh,
Totally. I
yeah,
definitely see that day where you go to you walk into your bank, or maybe you don't walk into your bank anymore, actually, post COVID, but
yeah,
you get your Bitcoin at your bank
yeah,
for the average person that
right,
already has a mutual fund or a CD or something, right? They're like, oh yeah, I guess
right,
I'll get some Bitcoin, from my Chase or whatever. I
right.
definitely see that there.
Yeah,
And it's just the business opportunity. It's not. It has nothing to do with any of the altruistic nature behind Bitcoin. It's strictly a
sure.
bank business opportunity to create
Yeah,
margin for themselves. That's
it's
all
it's
it is.
it's basically layer two, right?
Yeah.
It's how the capital markets and how payment solutions is now going to be more integrated with
Right.
Bitcoin, and so I think that's important to get more traction and adoption.
Totally.
Because now, like I said, it's a $150 billion market cap, right? And I
Yeah.
think crypto is maybe 200 billion. I think when it gets to 1 trillion, that's when I think Wall Street will take us more seriously, which is good for now. We don't need, the Citadels and the Renaissance, they're getting into it as well. But those guys, once they take over markets, it's like they're either going to take us out and buy us, or we're going to exit, because
Yeah.
I don't want to be trading against those guys. There's like 350 of me's doing that, right? And we're not going to compete against that.
Right. Right.
Hopefully by then, if we are fully compliant, which we are, our fund of funds is, then we're going to add some value, right? Because then we'll be in compliant space already. We'll be fully lawyered up, SEC, FinCEN, all that stuff, fully compliant. And so that's kind of the antithetical to the Bitcoin ethos, because a lot of those guys are, they like being in the weeds, they
Yeah.
like being out there. But I think if the part of the transition to traditional markets, it's going to happen at some point, and we kind of half want that to happen. But again, I understand there's a lot
We
of pushback too from the
yeah.
open.
Well, you can't have both, right? I mean,
Right.
you can't have, own your keys, own your wallet, and all on your own, and then
Right.
have massive scale. It
Yeah.
doesn't work, right? Like
Yeah.
everybody at scale owning their own private keys, private wallet, just it would
Right.
never happen
Yeah. It's
because
quaint. it's kind of cool.
Yeah, I love the idea. Don't get me wrong, but
Yeah.
like
But at
I'm a
some point,
yeah, I'm a product manager. I've been a product manager for many
right?
many years. My job
Sure.
is to basically create the business case and make sure
Right.
that the technology is accessible to the
Right.
person, right? And it's just not there on
Yeah.
that side of it. But I think arguably that's another reason what makes Bitcoin to me so interesting is because regardless if you get this layer two, everybody at layer one is going to have an advantage, right? And
Right.
so like it just like if you are the type of person that knows how to program software and then also has the business mindset to market that software, if you're one of those
Right.
rare unicorns that can do both of those things, you have an advantage in the types of products that you create and you develop, right? Same thing
Right.
with any of these layer one folks. These layer one folks that understand that and can understand the business practice aspect, like they're the rock stars. I mean, they are the true unicorns out there, and those
Yeah.
are frankly the people that I love following
Yeah.
on Twitter and social because they typically don't talk about price. Like they're just more, or like I get personally sick of some of these folks that just always talk about price, but don't have
1 million or
yeah,
100,000.
but don't have any substance behind it, right?
No.
So,
Right.
there's a couple, advocates out there that I really like listening to. That
Who are the ones you follow? I mean, I follow probably the same ones, but
I like Pierre Rochard a lot. I think he's super
okay.
rational. I mean, he's definitely a
Right.
maximalist, and he definitely is 100% Bitcoin, but he's rational in the way he approaches things, which is I really like. I like Dan Held or
Yeah.
Dan Held a lot
Kraken.
too. Yeah, he's
Yeah.
very maximalist also, but again, I think
Yeah.
he's rational. I get kind of tired when sometimes people are super Bitcoin maximalist, but again, yeah, like they're like you only have to do it in this one specific way, and like that's it, and we're gonna scale this way. It's like that doesn't make sense, right?
Right.
So yeah, I like both of those guys. I think I like Jimmy also.
Yeah.
Jimmy Song, he's good to follow.
He's an
Um,
interesting character.
yeah, he's very passionate, right?
I think
So
we all are. I mean,
right,
even before this virus hit thing, most of my team members, we work 24/7,
yeah,
not 24 hours a day necessarily, but I'm getting calls at 2, 3 in the morning sometimes,
totally, yeah,
and I work 7 days a week, and this is the best part. It's not work to me.
yeah. Oh,
you know,
totally. No, same.
Good jobs, good careers prior to this, being in semiconductors and
Yeah,
defense electronics or whatever. But I love my jobs because I was making good money. But this is like, this is part of who, it's not just what we do, it's part of who we are.
yeah, yeah.
And people can't relate to that because that's why I don't think, knock on wood, I don't think I'll ever burn out. I don't think I'll ever retire.
Right.
I don't know what else I would do.
Yeah.
Honestly.
No, it's just fun.
Yeah,
Um,
I don't watch Game of Thrones. I mean, I don't understand any of that stuff. My family watches it, academics, but they're like they tune out. They just watch TV. I'm like, I can't understand. And they thought I was crazy, right? It was
yeah.
like 8 years. Now my sister goes to the same sister. She goes to my presentations now. It's kind of weird.
Yeah. Yeah.
Her venture capital patients, they got into blockchain in 2017. So in 2018, it was safe now.
That's funny.
2013, we were out in the weeds, right? So, but yeah, I've met some really cool people along the way. Like I said, I mean, Scott Robinson, how do you get access to Roger Ver and Andreas? I mean, it's crazy.
Oh
We-
yeah. Yeah, I left out Andreas. I shouldn't. Actually, Andreas is one of my favorites. Just
yeah, he is.
again, because he's super rational and he keeps it technical,
Yep.
and so
But
all his
easy for the newbies.
correct,
to
and so
understand.
all his arguments are very rational and technical and not
Yeah.
emotional. I think that's the best way to put it. Is when someone gets very emotional about their position, that's when
Hmm.
like, wait a second, they're not putting all the thought behind it.
Yeah,
And
there's
so
passion, there's emotion. Yeah.
correct, which is, don't get me wrong, you have to have passion, you have to have
Sure.
emotion, but I guess my advice to other people is like, make sure that the people that you are following are rational in their thinking as
Right.
well.
Is
So
this biblical? But one of the expressions is make sure they have fruit in the tree.
yeah, I don't know if it's
Because
biblical, but yeah, it makes
yeah,
sense.
this space is pretty it's still pretty not closed, but it's pretty tight. And so a lot of people know a lot of people.
Yeah.
So like, by the way, Berkeley, one of my partners co-founded the Berkeley Accelerator, the blockchain accelerator. And so Berkeley has, Stanford, of course, they have, and one of my good friends, he's the head of the Stanford College of Engineering FinTech, advanced FinTech lab. He's starting up a digital currency lab too. And this is the fight. I'm kind of I'm ambivalent towards central bank digital currencies because again, it's kind of antithetical to, it's going to be decentralized, I guess, but it's still, still sovereign, just like Libra is still Facebook, right?
Yeah.
But they need to establish standards for interoperability for different digital currencies.
Yeah.
I'm helping with that. And the bad news is Stevie Schwartzman like donated $250 million to Oxford. He's American, right? He should be investing here.
Yeah.
And we're kind of falling behind, even the Chinese when it comes to that stuff.
Well, it's funny. Just the last thing is, and sometimes people don't like when I say this, but I'm like perfectly okay with the stable currencies or the digital currencies of banks being centralized because again, I'm thinking about the business aspect of it. From a business standpoint, it makes sense for them because
pragmatically, practically.
Just being pragmatic, exactly. If I am JP Morgan, I want to send transactions faster. And I want to basically get rid of this Swift system that I've been using, and I want to interoperate within myself, and I want to save money and increase my margin. So I'm going to use this. I don't give a shit about decentralization if I'm a bank, right? And so like I don't have a problem with that. However, to me, that's what makes Bitcoin so much more interesting, right? Is that like you can't do that. So I think you can have both.
It's supplemental, not necessarily in lieu of.
Correct. I just think it's silly to when anybody like compares or says like, oh, like this is the competitor to Bitcoin. It's like, no, a central bank currency is not a competitor to Bitcoin. It's something totally different. And anybody that has Bitcoin is not afraid of it or shouldn't be afraid of a central bank currency. And frankly, I actually don't think banks are afraid of Bitcoin personally, because it's just and the reason why I say that is because they're so focused on creating revenue opportunities for themselves that as long as they can still generate revenue opportunity for themselves, like they're not going to be worried about Bitcoin. I guess today. Now, in what Bitcoin can become and so forth, and if Bitcoin is in fact one day this global currency and we all just use Bitcoin, nothing else, sure, maybe. But there's just a lot of time between now and then that I don't see how a bank could be afraid of Bitcoin.
I kind of agree with that. I mean, BTC is still not scalable, right? And so,
but even if it was, go ahead.
Sorry, as long with anything, whether you do a hard fork or not, to me, opting in, you have to have that option. That's mandatory with me. So this digital currency thing, I understand. Like Accenture's working with Sweden's central bank digital currency. They're buying natural gas from oil from whatever. It's free, by the way, today. They have to be interoperable with Russia's, or China's if they're trading with them, their digital currencies. So that's why and again, it's the United Nations, it's ITU. That's why they want us to establish standards because they have to talk to each other, which means there has to be the payment solutions have to be to match versus the SWIFT, which is a horrible system. We all agree. Yeah. But I agree with you. And that's where I'm kind of straddling the line. The key point, the takeaway with me though, it's got to be an opt-in. Totally. As long as they don't force us all to go into a Fed coin, for instance, then I'm okay with that.
Well, sure, because and so that's the thing is like, so what's funny is that even though I'm not pro digital currency by banks, by the way, I'm just saying I can going back to that whole rational concept, I can rationally understand why they would do that because it makes sense for their business case. But because of that, that is actually one of, not the only reason, but that's one of the factors I am so bullish about Bitcoin is because of that side of it, right? Because I know it makes sense for them and that they should do it. And that's the direction that they need to go if they're a bank. That there should probably be some like digital currency, for countries, but with that comes more tracking, more,
there's a downside to that.
There's a total downside to that, right? And so again, all the more reasons why I'm super bullish on Bitcoin overall is because of a lot of those things. But it will happen. It has to happen. It makes business sense for those banks to do.
Yeah, and it's like I said, it's just practical, and there's so many different ways. That's one of the things Andreas put imparted me. By the way, I hunted him down in 2013. I saw my old emails. I was like, I got to talk to this guy. Some friend introduced us. He was like on the speaking circuit. But basically, he says with Bitcoin, what's beautiful about it is there's so many different permutations that you can, you can fork off and you can do all kinds of stuff. Just this morning, I was on watching, I think it was Max Kaiser. Some guy from, I forget, the Fold. They're issuing a credit card
Yeah, yeah.
where now they just launched it last week. You can actually earn BTC by using it.
Right.
So yeah, you're matching the crappy world. I mean, people don't realize, when people say, "Oh, Bitcoin's so weird," it's so scammy, it's so insecure. I'm like, this is what's scammy. I give, and it's happened to me before. A lot of people. I give my credit card to the waiter. I'm not saying they're all crooked, but some are. I just gave him away my password.
Yeah. Oh, totally.
The 16 digits, the
Front and back.
expiration, all that stuff. To me, that's kind of weird, right?
Right.
And so, but anyways, they're marrying a not so great technology. I mean, credit card has been around for decades, right? Before the internet, it wasn't made to be. The internet wasn't made to be secure, by the way. So when you go online, there are a lot of issues. There still are. He's marrying a not so great concept to one that's beautiful, because people want to get engaged. They don't understand Bitcoin sometimes, but they hear about it over Thanksgiving dinner and they want to participate. They just don't know how sometimes. And I encounter that a lot. I mean, there's a lot of people say, how do I start up a wallet? So what I do is I'm kind of lazy now, because I have friends that have, primers and tutorials on how to open up a Coinbase account, and whatnot. And so I'm trying to get, like we all are, trying to get more people involved in this space, because as we all know, it's a hockey stick, right? You need escape velocity. There's an S curve of adoption, all that stuff. The more people, there is a network effect, right? The more people that get on this thing, the more demand, and the better for all of us, not just price wise, but adoption. Because it's like the internet, right? I mean, people thought, what I can, if you would have told people in '93, oh, wait, you can send to all your friends to do a broadcast instantaneously for free, they thought you were con artists then too.
Yeah.
Now everybody uses email, right? 20 years later, whatever, or less than that. But so we're still at that curve, and there's still a lot of skepticism. I mean, I follow Peter Schiff. You probably know him.
Mm-hmm.
He's a clever guy. He's been right on the crash in 2007, 2008. But I don't understand why he's just so against Bitcoin still. It's kind of weird to me. Smart guy. So there's a lot of people still skeptical, and I understand that. But if they really, anybody that does a deep dive in this stuff can't come away, to me, in my opinion, to not be a Bitcoin maximalist. Sure, there's other cryptocurrencies. There's Ethereum that I'm a fan of, not as a currency necessarily, but it's got some great behind it. Bitcoin Cash, there's some downsides, but geez, it's pretty easy. I have some Litecoin. I don't like the fact that Charlie pretty much left. But I have some of that too, right? But to me, Bitcoin, because, and by the way, Google is a 21st search engine, right? What does that mean? First 20. So having first mover advantage isn't always an advantage. You still have to execute. But with Bitcoin, as you know, the longer the chain, the more secure, the harder it is to hack, the more money it takes actually to hack, right? And so, and I tell people, Bitcoin's never been hacked. There's been attempts. Where you hear of hacks, it's at the exchanges, right? That's where it's vulnerable.
Right.
So there's misinformation out there, and all we can do is just, try to undo some of the FUD. And if people are going to be that resistant to it, then you can't change your mind. That's fine too.
Totally.
But,
I think that's one thing I realized also is, I had a friend the other day who was like texting me about how like it's a scam and this and that. And I just didn't even respond. I was like, I don't have the time or the energy to convince you. And there's enough information out there now that you can make your own decision.
Sure.
You can think what you want. That my passion or position is not to convince anybody to think anything. It's more just to share people's stories. I like sharing people's stories. I like talking a lot, I guess.
Yeah.
but
it's kind of sad that we're still having this conversation in 2020, honestly.
Totally.
What's happened in the last few years, you'd think more people would understand, but they still won't. They don't want to change.
Yeah.
So, yeah.
But awesome.
It is what it is.
For sure, for sure. Well,
Yeah.
hey, Greg, I want to give you 30 seconds to kind of wrap up, leave people with a question that they should be thinking about, or, something you want to kind of leave people to go about their day with.
Well, I would say it's been very rare, and maybe I'm stealing this from Andreas, but it's been very rare where money, the concept of money, has had such a drastic change. So with money, like governments can control pretty much everything, right?
Hmm.
And with this change, it's like the printing press or the dawn of the internet. That's how it's like a step function, right? It's
Yeah,
change, and either you adapt to that or you don't. And history shows adaptation is pretty important, and
yeah,
especially this day and age where markets are getting disrupted. The concept of what is money or what is currency is being challenged right now. And so, at worst case, you should at least people should look into this. Whether they're Bitcoin fans or not, they should understand that printing trillions of units of currencies, not just in dollars in America, but worldwide. How does that affect your purchasing power, your standard of living? There's going to be some really hard questions we're going to have to ask going forward here that we've never had to ask for generations. Unless you're 100 years old, you understand what happened in the early 30s or all of 1930s, right? And so there's a lot of things that people should be aware of that they should think of, not just Game of Thrones, on the whole concept of what is value, what is money, what is currency.
yeah,
They're all different.
totally.
So that I would take away from people listening to this.
Yeah,
Uh, watching this. So, yeah, that's pretty much nothing earth shattering. It's just that kind of is earth shattering actually,
yeah. It's
because
just open up your perspective, be aware.
yeah,
I agree.
exactly.
I agree.
So, but yeah, this has been awesome, and I appreciate the invite because I know
Yeah,
your previous speakers are like they've been awesome, and so I'm just glad to be part of that group.
yeah,
Going
man.
can't wait till you come back.
I'm looking forward to it as well. It'd be good to see you in person. And yeah,
Yeah,
I always like what you have to say about just kind of traditional markets and so forth. So I thought other people should get a listen to that as well.
yeah, great.
Um,
I appreciate it.
well, Greg, thanks so much for being on the show. What are the
Yeah.
best ways that people can get in contact with you?
Um, probably go on my LinkedIn. Um, it's Gregory Nguyen. It's spelled Nguyen. I think Greg the Gold Guy. You could probably reach me there too. Like I'm in a lot of different businesses, and so I'm out there. And so yeah, people
You're findable,
my
searchable.
website, but yeah,
Cool,
I'm searchable.
cool,
So
cool. Awesome. Well, hey, everybody, thank you so much for listening to another episode of the TF podcast. Please make sure that you are subscribed on the podcast that you're listening to this, whether it be Apple, Spotify, Stitcher, or any other one. Also, please make sure that you're following our YouTube and Periscope because we go live with these episodes on there. And you can follow us at TF Blockchain or at JG Product. That's me. And please, if you like it, do us a favor and fill in those stars so we can get this out to more people. Thanks so much, and we'll talk to you again soon.